Is buying a mobile home park a good investment? Are mobile home parks the best kept secret in commercial real estate investing? Let's go over the pros and cons. Why are wealthy investors and private equity firms buying mobile home parks? Well, I'm going to show you in this video. Think mobile home parks are just cheap housing? Well, think again. They've been the best performing commercial real estate asset class over 20 years. I'm going to show you why investors are buying them up. By the end of this video, you're going to know if mobile home parks are a good investment, what are the risks involved, and if mobile home parks are the right fit for you. Why are mobile home parks so profitable? They're all over the country, yet most people don't know that they are such cash flowing assets. And why are they? Well, number one, demand. Affordable housing is probably the biggest crisis we have in real estate in the country. A need for affordable housing. Mobile home parks are the most affordable housing there are in the United States. So there's a high demand for these properties. Number two, there's not a big supply of them. There's 40,000 mobile home parks in the country, yet the asset class isn't growing. There is very little development, so there's a limited supply and more demand for this affordable housing. Number three is consistency with cash flow. Every single month, these tenants pay and they don't move their mobile homes. It's a very durable industry because it's $10,000 or more for a tenant to actually move their mobile home, if that's even possible. Most municipalities don't allow you to put a mobile home on any land unless it's in a mobile home park nowadays. So it's sticky. People stay there and they continue to pay rent. Number four, low operating expenses. When we talk mobile home parks, we're talking about land lease communities. We're not talking about owning the homes or owning the trailers. So these are very low operating expenses. You have your taxes, your insurance, your management, your maintenance, and utilities. You're not dealing with toilets, paint, carpet, roofs. You're just dealing with infrastructure and collecting payments off that land, which creates large margins that investors can profit from. The scarcity creates opportunity. Like I said, they're not building more mobile home parks anymore, so that scarcity continues to drive more demand to these assets. And there's limited zoning. Very, very few municipalities will allow development of a mobile home park. So that scarcity creates a lot of demand and higher prices. Mobile home parks are recession resistant, so meaning even in a down economy, people are going to pay their rent. This is the most affordable housing there is. Investors like this security because in up markets, people still pay their rent in mobile homes, and in down markets, people still pay their rent. It is a durable asset class because recessions come and go, and yet affordable housing is here to stay. This solves the problem of affordable housing, and there's a diversified stream of income, meaning lots of tenants, not one large tenant paying the rent. There's 50, 100, 200 tenants all paying. So even if you lose one or two tenants, investors like that diversified stream of cash flow so that you know even if you lose part of your occupancy, you're still going to be able to generate profits. Potential downside and risk. Rent control is a major issue. A lot of states in the US are adopting a rent control statute across the state where you can only raise your rents to a limited amount each year, or you have to apply to a rent control board and have a hearing in order to raise them over a 3 or 4% amount. This isn't going to prohibit you from investing in mobile home parks, but you need to know the laws. If you break the rent control laws, there's heavy penalties, and a lot of mobile home park investors have abused this and raised the rents too dramatically, hurting these tenants where they can't afford to pay the rent at their property. And because the investor has the leverage of owning the land where the home sits, and the tenant doesn't have the ability to pay to move that home to a more affordable area, they're stuck. And that's where you don't want to abuse this process. You just have to be careful. How much is rent control and how much can I raise the rents? And if you can't raise the rents, like for me, I was just in the middle of buying a mobile home park in Western Massachusetts near my hometown. I noticed I cannot raise rents no matter what. And the rents are 60% below market rent in the area, but this particular municipality won't allow me to raise rents. So there's no way to make money on the investment whatsoever, and if that's a restriction, you get burned, and you do not want to invest in properties that you can't raise rent over time because inflation will continue to increase your costs. Tenant issues. This is part of the business of mobile home park investing. There's going to be domestic violence, drugs. There's going to be debris all over the place on some of these mobile home parks. This is part of the business. Now, higher quality parks, that's not the case. Low-income housing, this could be the case. Be ready for the management. Unfortunately, there's not a lot of good third-party managers out there to manage mobile home parks because it's not economically feasible for a management company. So if you get lucky, you can hire one to manage your park, but more importantly, you're gonna have to learn how to manage it yourself or invest with a partner who's gonna take on all the management. The safety and security of the actual cash flow is there, but there's a trade-off to that, is actually dealing with customers, because mobile home parks are a business before they're a real estate play. Also, utilities. Private utilities are prevalent in mobile home parks. If you own the water system and it's a well, or if you have the sewer system, which you're using septics, or a lagoon, which is a big tank that holds all of your sewer, you maintain those systems. If they go defunct, then you are stuck rebuilding them. And that's a significant cost on the infrastructure. Also, your water and sewer lines are typically 30, 40, 50 years old. So under the ground, there are huge risks where if your water lines are damaged, you may have to tear them all up and replace them. So getting a leak detection test or inspecting your sewer lines with a camera, that's critical when you're buying a mobile home park. Checking those systems is really critical, because if water's leaking all over or your sewer pipes don't work, that could be a $500,000 to $1 million investment on top of the price you paid, and you can really get burned. So how do you evaluate if a mobile home park is a good deal? Well, it's common sense, honestly. The way I look at a park is, would I want one of my family members, like my aunt or my grandmother, living in the property? If I don't feel safe that they're there, then I don't want to own it. I've owned a lot of parks with a lot of really rough tenants, sex offenders, drug addicts, many challenging aspects to those types of properties. And at this stage of my career, I would advise not jumping into those. It's just not a fun process unless you're ready to get your hands dirty, and they can be very profitable. The type of mobile home parks to look at are, do I feel safe? Are there quality tenants? Do they have jobs? Are there the incomes in the area where they're getting paid enough to pay the rent? Are the homes nice? Do they show a pride of ownership? And they don't have to be perfect, but do people care about where they live? What are the quality of the homes? Even if you don't own the homes, higher quality homes means tenants care about where they live. Now, if there's some older, dilapidated or junky homes in there, less than 10 or 20 or 30%, then you can fix that over time. But if the majority of them are really outdated and there's no pride of ownership, it's probably not a good park to invest in. Obviously, you want to evaluate the cash flow. You want to evaluate what the cap rate is. The numbers are everything, but the quality of the park is first. If it's going to fall apart, or if you don't have the right quality tenants, it's not even worth investing in the first place. So if you'd like more about how to calculate the return on investment, then go to my website, patriotcalc.com. We offer a free calculator to input any deal that you have that you're thinking of investing or buying a mobile home park, and that will generate the cap rate and the return on investment for that property.